you take capital gains that exceed the 180-day rules and put the funds into an opportunity zone. Take the advantage of the benefit. Okay, so Nicola, no, you cannot. Like, you could put them into the opportunity zone, but you can't take advantage of the 10 years. That's only for deferred gain. So for those of you who don't know what the opportunity zone is, we'll probably answer a question about it tonight. I've been talking about it since they passed that law in December 2017. But you can defer taxes for 7 years now and pay on only 85% of it, and pay zero gain on the assets that are held for, or the qualified opportunity fund, the assets really that are held for 10 years or above. And you can actually roll assets into each other. That just came out in the new reg. So, what is an opportunity zone? See, Jimmy, that's why you're hanging out here. An opportunity zone are areas in the country that are economically disadvantaged, where the Tax Cut and Jobs Act gave these huge incentives for people to invest in them. And if just for giggles, it's 26 USC 1400 Z 1 and 2. So it's 1400 Z 1 and 2. And hey, Tom, if you're having issues with audio, it might be wise to use a telephone to call in, because the chances are it's the internet feed. I don't see a bunch of people having issues, so when I see a couple pop up. Anyway, so the opportunity zone gives us two huge monstrous advantages. Number one, it's available for any capital gains as long as you invest in an opportunity fund, which owns opportunity zone property, which an opportunity fund is an LLC, taxed as a partnership or a corporation, or a plain vanilla corporation, or a plain vanilla partnership. And it owns 90% of qualified opportunity zone property, which could be the actual property itself or a business in that area. And then the business has to be like 70% of its income has to be in the opportunity zone. Like, it gets all crazy. We get down to 63% of the money is actually derived in the opportunity zone. You still get this benefit. So what you're doing is let's just use an example. If I sell some Bitcoin for $1 million and I put it in the opportunity zone. And again, these are geographic areas. You can heat map opportunity zone, and it'll pop up a map. If you Google heat map opportunity zone, you'll be able to see it. And you'll see all these different areas. All states have them. They proposed them in 2018 and they were all approved. But you could see certain zip codes where they're calling it an opportunity zone. If you invest in that, and you invest in a fund that invests in opportunity zone property, then you can get these benefits. And the benefits are twofold. Number one, I can defer my gain that I rolled into an opportunity fund within 180 days of my sale date, or 180 days from the end of the tax year, depending on the type of gain it was. I'm not going to get into all this stuff today. But you may have a period. But if you sell your Bitcoin on January 1st, you have until the end of June to invest in an opportunity zone. It doesn't have to be the same money either. It's just anything. So the beautiful part is you do not have to pay tax on that until 2026. Right. And you only have to pay tax on 85% of it. And it's still long-term capital gains if you owned it for long-term capital gains. So that's number one. Number two is whatever you invested in, that gain, if you held it for 10 years, you never have to pay tax on it. So if I'll give you guys, a lot of you guys are real estate folks, you have to double the value of the improvement on the real estate. So I buy a tract of land with the building on it. The building's worth $500,000. The tract of land is worth $600,000. I have to put $500,000 into it. So it's $500,000 the improvement, $100,000 the land. I don't care about the land. I care about the improvement. So I have to double that. So I put 1.1 million into it, and I defer 1.1 million. I only have to pay tax on 85% of that, so about 900,000 in 7 years. So like first off, I get a big deferral, and I don't have to pay 100% of the tax. Then I hold that $1.1 million building, let's say for 20 years, and it goes up to $5 million, and I sell it for $5 million. Guess how much tax I pay? Jeff, how much tax do I pay?
Zero.
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 Yep. So I get a big, huge, fat tax benefit. That's an opportunity zone. That's why it's a big deal. So anyway, I don't even know how we got onto that.
And it's good that if they look at that heat map, look, you'll see the typical urban areas around big cities.
Yeah.
But you'll also see a lot of areas that are in rural sections of the country that may be suffering from lower income and
Yep.
low values, and so they're really all over the place.
Yep. Yeah. So somebody's at, now we have a whole bunch of questions. And how would you tie a private IRA to your corporations? You don't. They're individual. What you do is you get a 401k. And let's say opportunity zone besides your capital gains amount isn't a requirement to put new dollars equating to gain amount and to rehab the property. Yes, you have to improve the, if you buy land, you have to double it. If it's just land, you have to put in whatever you paid within 31 months. So it's not as bad as you guys think. If you are fixing up a building, you have to double the improvement. Just the improvement value. You can get the tax assessor and figure out what the land value is. Any reasonable method, right. I believe. But if you buy a regular business, then you're like, you don't have to worry about any of that stuff. You're just putting the money into the business. So as long as it's being used. It's really awesome. Can sales proceeds from properties held in personal and passive entities go into the same fund? Yes, absolutely. Lloyd, you can combine them. And you can do multiple contributions to the same fund. And you can set up a fund like Anderson. We set up those funds all time. It's just an election that you make in the first tax year. You got to have a little bit of magic language in the LLC, which is what I prefer to use. And yeah, you can create your own fund, and it's absolutely awesome. And you can have mixed assets into it. You can throw, you can use the gain, but you don't just have to put in the cash from it. You can put in other assets too. Like there's other things you can do to get it. So. In the Opportunity Zone Fund, can you take the loans the same way against rental properties? Asset protection rules still apply. So if you have an Opportunity Zone, you can have LLCs held by that Opportunity Zone Fund. Absolutely. And there's no guidance right now on the taxation of loans. In fact, the only guidance we have is that you can borrow money against the assets. So it looks like you have a lot of leeway, and they're basically giving us, in the regulations, they just came out with 180 pages about 2 weeks ago. They're giving us way more than we anticipated.
Do you know if the guidance actually says that the loan has to be reinvested into the?
Does it have to be reinvested?
Yeah.
I didn't see that in the red.
I'm not sure if it's in there or not.
I know that if you want to, like, if you sell an asset in an Opportunity Zone and they said, hey, it's not fair that if you sell it, you have a taxable event when you should be able to reinvest it like a 1031. And they said, yes, you can reinvest it as long as it's reinvested within a year. So you can buy properties. Technically, I guess you could be flipping inside the Opportunity Zone, have a smorgasbord there.